Hey guys, what's going on? Welcome to the video. So we had another volatile week in the stock market, with this time concluding with a strong breakout into new all-time highs on Friday. In this video, we'll be going over what to expect next from the broad market as well as Bitcoin, including key levels and upside and downside triggers, and then go over the top trade ideas that I'm watching in the week and weeks ahead. As always, there are timestamps in the description, and let's go ahead and get into it. So starting out by taking a look at the S&P 500 with the SPY chart, on Monday of this past week, it rallied back up to the top of the range, which includes the 672.68 to 673 key zone, along with the previous all-time high at 673.95. It spent 2 days consolidating just below there before a midweek pullback, which got bought up strong, and was back to the 672.68 to 673 zone on Thursday. Then Friday had a large gap up, which triggered the breakout out of the range and into new all-time highs. So the market continues to be very strong overall, as it just shrugged off all of the bad news from the past couple weeks into another all-time high breakout. Now this is also before we head into one of the strongest seasonality times of the year, as we went over last week, which will be another bullish signal for the market. So into next week, the previous high at 673.95 as well as 672.68 to 673 now become key support to hold in order to keep Friday's breakout intact. As long as it holds above there, it is in price discovery mode with no defined resistances above, and it can continue to grind higher into new highs. If it fails back below 672.68 to 673, it would be a failed breakout and could trigger a pullback back to the previous range, though as long as it's above, there's zero bear case and zero reason to fight the trend. Now taking a look at Bitcoin, in last week's video we went over the major sell that happened after the failed all-time high breakout, and it had pulled all the way back to test the 105 to 109,000 key zone as support. And what played out last week was a lot of choppy price action, though so far that zone has continued to hold as support. It put in a higher low and has tested key resistances above at 112,000 and 113,400 to 114,000, which have held so far as resistance. So from here, it's a pretty simple outlook into next week. 105,000 to 109,000 continues to be key support to hold, and ideally above 106,000 to keep the higher low in play. A break and hold above 112,000 and 113,400 to 114,000 would be those larger upside triggers, which would open upside back towards those key levels above at 117,000 to 117,500, 120,000, and then upside back to highs above there. On the downside, key supports are at the current higher low at 106,000 and then 105,000, which are key to hold to keep upside in play. A break and hold below 105,000 would open larger downside towards 100,000, and then the trendline backtest, which would be at about 97,500 to 98,000 into next week. Overall though, I would lean bullish on Bitcoin as long as above 105,000 to 106,000. Below there, it would be high risk for a larger pullback to take place. So now getting into some trade ideas for the week and weeks ahead, starting out with the trade desk, ticker symbol TTD. So taking a long-term view of the chart, we can see that the stock has had a couple recent major gap downs and sell-offs, but each of those sell-offs so far have gotten bought up right at 43, which makes for a double bottom reversal pattern. Zooming into the chart, this past week it reclaimed back above the 50-day moving average, which has historically acted as a major pivot for the stock, and it has now built out a well-defined inverse head and shoulders pattern with a neckline and breakout trigger above at 55.2 to 55.55. It's important to note that it did have a late day sell-off on Friday after news dropped that Amazon is pushing to enter into the same ad model as TTD. Obviously, you don't want to compete with Amazon, but so far this is not confirmed, and the stock very well may just shrug off this news and bounce right back. Key supports to watch to hold if tested are the 50-day moving average at 50.66 and the $50 key level. If tested, buyers would want to see a strong reaction off of it to keep that immediate upside in play. And breaking out to the upside above 55.2 to 55.55 would target the next key levels above at 59 to 60.65, 65 to 66.4, 68.85, and 72.7. So now taking a look at the dip buys that we went over in last week's video, Amazon, ticker symbol AMZN, has played out very nicely so far. So last week we went over how it needed to reclaim back above the 216 to 218 key zone in order to open upside, and it did so with a break and successful backtest of it as new support. It is now testing the 225 to 226.8 key zone, which also lines up with the 50-day moving average, which is currently at 225.15, and that will be a big decision point into next week. The current setup can also be looked at as a falling wedge pattern that it broke and closed above on Friday, though we'll need that break above the 50-day moving average for continuation higher. And this will all come down to how earnings go next week, which is on Thursday after market close. A favorable reaction after earnings, and it could easily see a move back up to the top of the range at 240 to 242.52, which would be the larger breakout trigger above into new all-time highs. If it has a downside reaction after earnings, 216 to 218 and the 200-day moving average at about 214 are the key levels that should be on watch to hold as support. If it breaks below those levels, then it would put a deeper pullback back in play once again. And the other dip buy setup that we went over last week was with Meta, ticker symbol META. In last week's video, we went over how a break above the 721.55 to 725 key zone would be the upside trigger, and it did so with a successful backtest of it as new support as well. Similar to Amazon, it is now at the next major decision point with earnings next week as well. There's potential for a very large move depending how it goes. So it's testing the 741.35 to 747.85 key zone as resistance, which also lines up with the 50-day moving average, which is currently at 743.04. This would be the larger breakout point above, and a successful break above it can set up a move back towards the previous highs, with those levels at 780.6, then 791 to 796.25 before new all-time highs above there. And Meta reports earnings after market close on Wednesday of next week. If it has a downside reaction, 721.55 to 725, and then 691 to 700 are the key support levels to watch to hold in order to keep the range intact. If it breaks below there, then it'll set up a deeper pullback for the stock. So that is everything I'm watching for in the week ahead. The stock market continues to stay very resilient and has given zero reason to fade the trend until there's a sustained break to the downside, which we have not seen yet. Thank you guys for watching. If for anybody interested in joining the private Discord chat, that is the first link down in the description to my personal trade alerts, nightly watch lists, and I answer any questions you guys have in there. Good luck trading the week ahead, and I'll catch you all next time, and peace out.